Hi guys, welcome to Gold Today. This video is brought to you by the coach. Remember always our job is to make you rich. If you are a new subscriber, welcome aboard and thank you for joining us. If not yet, please hit the subscribe button. We are going to start our video with the economic calendar. On the economic calendar for Tuesday, we will be waiting for the following economic headers to be released from the United States: Red Book month to month and Red Book year to year. That's all for the economic calendar. We will be moving on now to have a look at the numbers. On the last trading session of Monday, we have had a trading range from 1493 to 1512. Numbers are rounded and the market is still open. For the closing price, gold spot is expected to print a closing price above 1497. It's actually now trading about 1493. Watch for this. For the moving averages, we are trading in a bull trend above all the daily simple moving averages, and as you see, the 20 days is about 1477 and gold is bullish above 1440. We are overbought on the weekly, monthly charts, and on the daily we are in a better situation. For the supports, 1490 followed by 1480 and then 1458, and for the resistance levels it's 1500 followed by 1505 and then 1511. That's all for the numbers. We'll move on now to the trading strategy. On the last trading session of Monday, gold and silver prices did slide down as a rally kicked in the US equities as recession fears faded. As I said, below 1534.8, we are technically in a correction. There was a weak momentum around the precious metals today, which is healthy so far and I see it as a chance to load up both gold and silver at good prices. The rally in the stock market has to be a short-lived one, otherwise there is a storm is building up and it's gonna lead to another round of a tough sell-off in US equities. The three main indices already traded below the main 20, 50, 100, 200 days daily simple moving averages. Technically, a rally is over and these are short-term rallies, and market so far did not find its floor. Add to this, there is an absence of sellers, negative divergence in the RSI. All makes me fear to be on the buy side, no matter where they are heading. The absence of sellers, in my opinion, could be attributed to the fact that investors are waiting to hear from Fed Jerome Powell speech due next Thursday, with high expectancy that he could signal a new rate cut by September. The last we heard from Fed Powell that it's a one rate cut and that's all. On the back of this statement, markets have fallen and we got into this falling yields and negative yields and an inverted yield curve. We are going to see if Fed's Powell opinion has changed or not yet. I'm standing by President Trump's demands of a complete rate cutting cycle, and I find it really hard to find out that Fed Powell point of view did not change after all what we have passed through in the last couple of weeks. However, gold is trading technically in a bull trend above its all daily simple moving averages. We are into a correction as long as 1534.8 is not cleared yet. Avoid the temptation of shorting this market, which has so many reasons to rotate $20 in a blink of eye. Look for a buying opportunity around 1490 or any dip of $15+. The move above 1500, as long as 1497 is holding, it's protected, but we lost 1497 from any close above 1520 for consecutive two sessions. 1600 will be again a very realistic target. As we say always, we have a market that is given, not the market that we wish for. For that, if this correction is going to take more time, it's going to take us to 1450 which was once a very tough resistance, and it has to be now a very strong support. Uh, uh, I see it a very good chance to buy both gold and silver at this price, and to look for a rally that could take us to 1600 if we reach to that level. In 2008 and following the financial crisis, the Federal Reserve Bank of the United States printed about 3.8 trillion US dollars and injected them into the financial system through the banks to help the economy to come together. This money is a printed paper. It has no value. It's not covered. There is nothing against it. So there was something called the tightening policy to take this money back from the system. This tightening policy also has been ended in the last Federal Reserve Bank meeting in the late July, with only 700 billion taken out from the 3.8 trillion, so leaving us with 2.9 trillion US dollars uncovered printed papers roaming into the economy of the United States. There are so many reasons that gold prices are going to rise more and more. Don't look for the price from a comparison point that it was that day for 1200 and now it's 1500. That's too much. When a crisis happens, so many other crises happen at the same time. This is how you have to look at the matter. Thank you guys for watching. Please share, like, and subscribe, and I will see you tomorrow in another video.